So good morning, everyone. Welcome to this webinar on CSRD, where we will talk about the long-term and short-term horizons with CSRD and ESRS. Of course, I'm thrilled to see so many participants joining us today from various parts of the world. And that's in itself a clear indication of the growing importance and a commitment towards sustainability that all of us have. So next slide, where we can look at the agenda real quick. So first, we'll delve into the essential elements of current compliance under CSRD and ESRS and how businesses can effectively integrate into their reporting practices. Next, we'll look at strategic approaches to stay ahead of the future changes and stay ahead of the curve. And finally, we'll open the floor to your questions where Kayleigh and I will address any specific challenges or inquiries you might have. So before we begin, a few house rules. The webinar is being recorded and a link to the recording will be shared with you in case you'd like to share it with colleagues. Please keep yourself muted during the presentation so that we minimize background noise and don't distract the speaker. And feel free to use the chat function to submit any questions that you might have during the webinar. We'll address these questions in line in the chat, but also during the Q&A session. There's enough time to address a lot of questions, so I would appreciate if more of us participate in that dialogue. Next slide, please. So my name is Aaroh Dhoundiyal, and I have the privilege of hosting today's session. I serve as Chief of Staff and Head of Product at Credibl ESG. Credibl is an AI native sustainability tech company. I come from a background in business strategy, design thinking, sustainability, and climate risk. And today I look forward to engaging in this dialogue with all of you. And we are fortunate to have an exceptional guest speaker with us, Kayleigh. So Kayleigh, welcome. Kayleigh is a sustainability expert known for delivering impactful work in the disclosure and policy space. So she helped develop the CDP's plastics disclosure framework to accelerate corporate action on plastic pollution and waste. For context, in 2023, just under 3,000 corporates with a combined market cap of US dollars 25 trillion disclosed to CDP, right? Representing the largest sample of voluntarily disclosed plastics data globally. So that's an amazing feat. And prior to this, Kayleigh worked on influential circular economy policy projects worldwide. This included working with the European Commission and Singaporean government on packaging plastics, textile policy, such as packaging and the packaging waste regulation and the EU strategy for sustainable and circular textiles. So together, we'll explore both the current requirements of CSRD and what we can anticipate in this space moving forward. So without further ado, let's dive into this session. And Kayleigh, the floor is all yours. Yeah, please.
Thank you, Aaroh, and welcome everyone. It's lovely to see so many of you here. So first, I'm going to discuss with you the current landscape of CSRD. Next slide, please. Yeah, so we're going to discuss the current landscape of CSRD and ESRS. What is it? What topics are included? And what does this practically mean for you? Next slide, please. Next slide, please. Thank you. So first, what's the difference between CSRD and ESRS? What are all these acronyms? And you'll see there's a poll, so please do take that poll and share your thoughts with us. So CSRD stands for the Corporate Sustainability Reporting Directive. It was approved in 2022 by the European Commission, and this directive expands the scope and the breadth of sustainability reporting in the EU for companies with significant operations in the EU, and what that means we'll touch on later. EFRAG is the European Financial Reporting Advisory Group. So this is the body that created ESRS. So you may have heard of the Non-Financial Reporting Directive. EFRAG designed the Non-Financial Reporting Directive, and when the European Commission passed CSRD, they were also tasked with creating a sustainability disclosure framework which expands to environmental, social, and governance. ESRS was completed in 2023. So ESRS stands for the European Sustainability Reporting Directive, which covers a range of ESG topics, including climate, circular economy, social issues, and governance, such as, diversity and inclusion, labor practices. So CSRD is, I guess, the legislation. EFRAG were tasked with creating a reporting framework that would meet the CSRD requirements, and that's ESRS. Next slide, please. So who is required to report to ESRS? So number one, large companies subject to the NFRD, the old NFRD, which ESRS replaced. So these companies are required to report to ESRS in 2025, so of 2024 data. So this includes public interest companies. So public interest companies are listed companies, banks, insurance companies, or other entities designated as public interest by national authorities. These companies must have total assets of 20 million euros or an annual net turnover of 40 million euros. And they must have 500 employees or more. To be required to report under this category, you must meet 2 out of the 3 employee or revenue threshold. Number 2, large companies who weren't subject to NFRD. These companies must report in 2026 for the first year using 2025 data. So as you can see here, ESRS has already expanded the scope of sustainability reporting. So which companies are subject under this threshold? So these are unlisted companies, and they must also have a total assets of 20 million euros or net turnover of 40 million euros. And they must have more than 250 employees. SMEs are also obligated to report under ESRS starting in 2027 of their 2026 data. This is only listed SMEs and SMEs that meet the criteria of a large company that we just went through in terms of revenue and assets. However, non-listed SMEs can still be required to report under ESRS, for example, as part of a supply chain reporting, or if their parent company is subject to report under ESRS and requires them to do so. And lastly, non-EU companies. Non-EU companies must report their first year in 2029 using 2028 data. These companies must have a net turnover of 150 million, and they must have an EU branch with a net turnover of more than 40 million. So many companies will be required to report under ESRS across the globe and of all different sizes. Next slide, please. So now I'm going to take you through the ESRS elements. ESRS has what they call cross-cutting standards, and these cross-cutting standards are, I suppose, the general requirements that every company must report on, regardless of if it's material or not, because this forms the basis of ESRS reporting. And then there's also topical standards that cover the E, S, and G element of sustainability reporting. And a poll should have flashed up, the second poll, which asks, how does CSRD differ from the existing NFRD? So do take that poll. I discussed that on the previous slides. So what are these cross-cutting standards of ESRS? One is the general requirements. So this is ESRS 1, and this covers mandatory principles and concepts to apply when preparing a CSRD report. So this can include, for example, value chain information, time horizons, how to prepare and present your sustainability report, or the structure of sustainability statements. It is under here as well that you will report how you have identified your stakeholder groups, which stakeholders are affected stakeholders, So that's which individuals or groups could be positively or negatively affected by your business, and users of your sustainability reporting. For example, your investors. But this could even be consumers or civil organizations. Then we have the general disclosures. So this is ESRS 2. So this covers your requirements across all sectors. So this is really how you will assess your material topics for the topical standards. So this is, for example, your impacts, risks, and opportunities. In ESRS, they're called Aarohs. So this is the process to identify your impacts, risks, and opportunities, to assess the materiality of them, and to manage strategies and actions. It also covers, for example, governance. So the controls and procedures for monitoring your Aarohs and overseeing them, the role of the supervisory bodies, risk management, integrating the sustainability in incentive schemes and due diligence. It also covers strategy. So you've identified your impacts, risks, and opportunities. How are you integrating that into your business strategy? And of course, metrics and targets. So how are you setting your goals and measuring performance against them? And then lastly, double materiality. So double materiality is a concept that applies to all of ESRS. And this covers both impact materiality and financial materiality. So what does that mean? That means companies must take into consideration their impact on the people and planet, on their financial performance, and the interlinkages between them both. So how does your impact on the planet that you have identified impact your financial performance? And this determines the topical standards that you need to report on. Next slide, please. So the topical standards, what are included? So as mentioned before, the topical standards are the environmental standards, social standards, and governance standards. And how you choose what to report on is through that doubled materiality assessment. So there are 5 environmental standards in ESRS. E1 is climate change. So this includes aspects such as measuring and managing your greenhouse gas emissions, your climate risks, and your mitigation strategies. This is probably familiar to quite a few of you. E2 is pollution. So this covers emissions to air, water, and soil, pollution control, and substances of concerns. This can include organic and inorganic pollutants, ozone depleting substances, other pollutants which may disrupt ecological thresholds as well, such as ocean acidification or soil depletion, and microplastics is included under here too. E3 is water and marine resources. So this includes your water usage and management, your water risks, and the impacts on aquatic systems. E4, ecosystem, biodiversity and ecosystems. So this includes topics such as your biodiversity and ecosystem risks in site locations and in your value chain as well. Land, freshwater, or sea use change, or ecosystem condition. So what is ecosystem condition? Ecosystem condition can refer to structural connectivity. So that means how well habitats link together, and functional connectivity, for example, how well organisms can move between habitats. It also includes aspects such as species richness and species diversity. The last environmental topical standard of ESRS is E5, resource use and circular economy. So this covers aspects such as resource inflows, circular design principles, and waste. So resource inflows is the total weight of your product and materials and the raw material content of them. For example, what proportion is recycled material, what proportion is from renewable material. Circular design principles are aspects such as, are these products designed for disassembly or for repair or reuse? And waste is what out of your products and materials, what percentage of that is going to different end-of-life management pathways, for example, to landfill or incineration, or being recycled or composted. Next slide, please. So then we have the social aspects of ESRS, the social standards. So there are 4 topical standards of social elements in ESRS. So first, S1, this is called own workforce. So what's included here? Here, there are aspects such as equal opportunities, grievance, what are there grievance policies and mechanisms to ensure that your employees can raise grievances and not be, persecuted. Working conditions. Working conditions could include things like health and safety, training, skills and development, your working hours, whether there is a good and fair work-life balance and fair remuneration. S2 is workers in the value chain. So this are all workers both upstream and downstream of your value chain. And this includes aspects such as labor standards, employee rights, and workplace conditions. Now, there's a large focus in disclosure on the channels and approaches available to engage workers in the value chain as well, because often a lot of companies don't know what's happening in their value chain. S3 is affected communities. So this includes aspects such as ethical business practices, anti-corruption measures, and compliance to those standards. And S4 is consumers and end users. So this includes aspects like product safety. How safe are your products when you put them on the market for consumers who buy them? Consumer satisfaction, consumer rights as well. Do you offer your consumers the rights to get a refund, for example? Are there easy and accessible mechanisms to do that? And lastly, we have the governance standard on the next slide. So there's only one here, but this covers the governance aspect of ESG. So this includes business conduct. It's called business conduct. So what does this mean? This means you have to disclose on how you govern your operations. For example, corruption and bribery. Are there plans and strategies to mitigate that or to reduce that in your operations? Political influence and lobbying, corporate culture, and also supplier engagement. So next slide, please. So you may be thinking, wow, that's a lot of things. That's a lot of stuff that you need to disclose on. And there are many standards and frameworks out there already, which is true. Yes, there are a lot. However, ESRS has a lot of interoperability or commonality between numerous other standards and frameworks, and I'll discuss them here. So CDP has recently announced substantial commonality between CDP's questionnaire and ESRS E1. So if you remember a couple slides back, E1 is the climate change topical standard. So what does this mean in practice? This means that ESRS E1 reporters will find it easier to complete CDP's questionnaire, and CDP companies disclosing to CDP will be well prepared from using that data to report to ESRS E1. There is also comprehensive mapping ongoing currently, and they will release in early 2025 a document with the alignment between CDP questionnaire and the other environmental topical standards that we discussed. GRI. So GRI and EFRAG signed a memorandum of understanding in 2023. So these standards have commonalities across different topical standards, covering the E, S, and G. So for example, GRI 301 materials. So this is partially aligned with ESRS E5, resource use and circular economy, focusing on resource inflows. So GRI 403, occupational health and safety, has commonalities with ESRS S1, and that focuses on hazard identification and assessment, staff training, worker participation and communication, and promotion of worker health. So GRI and ESRS are structured a bit differently in that GRI, you have individual topical standards, whereas in ESRS it's all in one, but that doesn't really change really how you report to both of them. And also incredibly important to note that there's a large crossover in the cross-cutting standards too. So as you remember, the cross-cutting standards really provide the structure of how you report to ESRS. So this reflects commonalities in reporting structure and approach, for example, materiality, reporting scope, stakeholder engagement, how you identify your Aarohs, your impacts, risks, and opportunities, and report on your targets. So companies reporting under ESRS will be deemed reporting with reference to GRI, and existing GRI reporters will be able to leverage their current reporting efforts to prepare the ESRS statement. Next, we have IFRS. So IFRS, there are high levels of interoperability in the climate standard. So E1 has high levels of commonality between IFRS, but also they define financial materiality in the exact same way. So both ESRS and IFRS define financial materiality as it's material if this topic is omitted or obscured or misstated in the statement, it will influence decisions of, or influence the stakeholders who are interested in the financial performance of the company. So this is incredibly important because this means that your materiality assessment is aligned between these two standards. So lastly, we have TNFD. So TNFD, the Task Force on Nature-Related Financial Disclosures, and EFRAG, they signed a Memorandum of Understanding in 2023 as well. All 14 TNFD recommended disclosures are covered under the ESRS topical standards to an extent. This is both the cross-cutting and the topical standards, including the social and governance aspects. Both TNFD and ESRS recommend identifying your impacts, risks, and opportunities, and they also recommend a double materiality approach as well. TNFD also talks about dependencies. So dependencies in TNFD is how reliant you are on nature for your business operations, whereas in ESRS, dependencies are seen as an extension of risks. TNFD also use a LEAP approach. This stands for locate, evaluate, assess, and prepare. And this aligns with the ESRS approach as well. So locate is you locate where you interact with nature. Evaluate is you identify the risks and opportunities. Evaluate is the materiality assessment, and prepare is reporting. So as you can see, there are a lot of commonalities between these existing standards and frameworks that can help you report to ESRS. And a lot of that work you have already done reporting to these standards and frameworks will not be wasted. Next slide, please. And then lastly, we have the kind of what is ESRS looking at in the future? So ESRS are looking at some sector-specific standards. And here you go, there's another poll for you to take. So which ESRS standard addresses climate change specifically? So do answer that poll. So what's next for ESRS? Sector-specific standards. ESRS are working on a few. Oil and gas and mining, quarrying, and coal mining, there's two separate ones. They have already released the first draft for those. So, and then as you can see there, road transport, textile accessories, footwear and jewelry, and some other sectors as well, like financial institutions and agriculture, farming and fishing are also in the works. So why is this important? Well, for these sectors, the topical standards, what is asked for in the topical standards will change slightly to make it more relevant. So how can it do this? First, you have relevant environmental disclosure will change. For example, for oil and gas, E5, if you remember, E5 is resource use and circular economy. Some specific materials, specific types of waste will be asked for example, waste sludge or petrochemical products. In oil and gas, it'll also cover indigenous peoples. How does your business operations, how does your business interact with indigenous peoples? Is there a fair and accessible way for indigenous people to voice their concern? Have your security personnel be trained in how to manage and interact with indigenous peoples, given that a lot of oil and gas sites are on indigenous lands? Also, more governance aspects such as transparency about contracts and licenses. Mining, quarrying, coal mining, what is included? So for E4, biodiversity and ecosystems, they'll ask for land use change. Have you assessed and identified the risks and impacts of this mine on that local biodiversity? Mapping of business sites, and this is vital because in a mine, the majority of impacts are local, they're site specific. And other aspects such as state aid and competition. How much money is our governments providing to this mine, and does it align with anti-competition laws? So the other sector-specific standards you see, they're currently undergoing research, or they're at various stages of drafting, even educating the governance bodies using a group of experts. So definitely keep an eye out for those in the future if that is relevant to your business. Thank you.
Thanks, Kayleigh. And must say, very enlightening, and we got a lot of engagement in the chat also. So we'll take up some of those questions. Before that, I have some questions for you, Kayleigh. Like, this was really enlightening, and this all of these insights, of course, are invaluable for me. So it was a great learning experience for me. So one of the questions, that I hear from customers as well, whom we interact with, and a lot of organizations that I work with, that how important is improving operations and resource management in an organization, and what role does this play in achieving, let's say, a better ROI through CSRD compliance? Like, are these factors significant?
Thank you. Yes, what a brilliant first question. Definitely, I think companies, when they are reporting to CSRD for the mandatory compliance that they need to take, you shouldn't just see it as a compliance exercise, because actually reporting through CSRD can improve your operations and your resource management to increase your ROI, to reduce your costs. So let me give you a few examples of this. Under E5, resource use and circular economy, you need to identify your resource usage. You need to identify what materials you're purchasing, what materials are making up your products, and then you need to identify how you're disposing of them. When you have this information, you can identify where your resource use is particularly high for whatever reason. You can identify how you can reduce your waste. You can even improve your energy efficiency through that. And what does this mean? Well, resource efficiency means reduced costs. If you're spending a lot of money on, for example, water because your operations aren't streamlined, that's a higher water bill. And that is how ESRS can support you to reduce improve your resource efficiency. Supply chain optimization is another one. So, increasing your circularity means reducing reliance on virgin materials. It means mitigating risks to price volatility caused by external factors which can be completely out of your control. Conflicts, for example, natural disasters. By optimizing your supply chain, you reduce these risks that could affect your business. And lastly, I think it's really important to talk about innovation here. I think the competitive companies are constantly innovating, and through gathering this data to report CSRD, that you can improve your competitiveness. Now, investment in sustainable operations also comes hand in hand with innovation, innovative practices and products that increase your brand competitiveness, market differentiation, and long-term resilience. So what's an example of this? By reporting the CSRD, you may be able to innovate your products to increase the circularity of them. You could innovate to improve your customer experience, innovating how sustainability information is shared with your customers. Even process innovation, which ties into the resource efficiency that we just talked about, smart manufacturing to reduce CO2 emissions, for example. But if you can't manage what you don't measure, and CSRD through that supports you to initially understand what's happening in your business and then improving your sustainability.
Very interesting. So great to shed light on some of these topics, right? And how you brought supply chain as a part of the answer also stitches that narrative and takes it broader into some of the deeper regulations that we're seeing in the European geography. So that brings me to the next question, which is somewhat touching up on these supply chain and value chain aspects, right? So I believe we already have some questions in the chat and in the Q&A section. I would recommend people shifting to the Q&A so that we can answer these questions better. But there's already conversations going around views on merging EU taxonomy, CSRD, and CS3D, which we are seeing what's happening in Budapest as well. But my question was more around how does, while we talked about interoperability with IFRS and TNFD, how does CSRD align with, let's say, other compliance frameworks that are supply chain and supply chain risk specific? For example, the EUDR, which is the deforestation free regulation, or the CS3D, the sustainability due diligence directive. So yeah, could you talk about that, Kayleigh, from your experience and what you feel is the interplay with these other regulations?
Yes, definitely. So for those who don't know, the EUDR is based on deforestation risks, and CSRD is for due diligence, and the EU taxonomy, I think, was mentioned in the chat as well. That's another one. So let's take EUDR and CS3D first. So do these frameworks, do this legislation require reporting to be compliant? Yes, they do require reporting, but through a different aspect to ESRS. So EUDR, this covers due diligence. You need to report your due diligence on whether your products contribute to deforestation. However, this focuses on operational compliance. So through this, EUDR reporting can be used then to report to E4, biodiversity and ecosystems. So what kind of linkages do you see here? Supply chain transparency is included in both. So you need to map out your supply chain and identify where your products could be contributing to deforestation. So in ESRS, we talked about value chain mapping, how you need the value chain mapping to identify your impacts, risks, and opportunities. So although you do need to reply to both, there is high levels of crossover in how that maps out, and high levels of commonality between them. CS3D as well. So this is due diligence across your supply chains to increase human rights and report on environmental impacts. So this more focuses on the operational process of identifying and mitigating these adverse impacts, whereas ESRS more focuses on the outcome, so the transparency of this disclosure. So again, they are separate frameworks, but companies, you can definitely streamline your efforts by using data gathered for CS3D to fulfill the ESRS social requirements or whatever's material. And then EU taxonomy, I think, was another one that someone raised in the chat. So EU taxonomy is slightly different. It's a classification system for environmental sustainable activities. So EU taxonomy aims to promote, transparency and accountability as well, but through classifying financial flows into different taxonomies. And by doing this, it has 6 environmental objectives: climate change mitigation, adaptation, water use, marine resources, transition to a circular economy. So as you can see, this is fairly aligned with the ESRS topical standards. So I guess the main takeaway from this is the reporting burden is high. Yes, we know that. However, these aren't discrete, separate types of reporting or assessment that you need to do. They all link into each other, and you can use your reporting for CS3D to report to ESRS. Same with EUDR.
Interesting. Okay, now I see. So the that so there's of course interplay, and I was I always hear that there's so many regulation that it creates kind of a reporting fatigue for a lot of CSOs and their teams. So really insightful how we can take a approach towards cross-referencing some of these data and not create redundant flows. So I believe it'll be helpful for a lot of operational folks, CSOs, and sustainability managers teams here joining in. So thanks for that, Kayleigh. And probably that also leads me to the last question that I have, and then we'll open up to more Q&A. But since we talked about this reporting fatigue, and I always hear it from companies across the globe, right? EU, US, the UK, that there are different kinds of not just regulatory pressure, but investor-driven pressure, brand-centric reporting. A lot of the Eastern geography that's applying to the West, there'll be a lot of brand-centric reporting that they have to do. So getting back to only, let's say, ESRS and ESG reporting, uh, do you see organizations increasingly looking at tech platform to aid in this ESRS journey? And what role do you see technology playing in simplifying this compliance reporting?
Definitely, thank you. I think this is a really critical question, actually, because ultimately a lot of sustainability departments are low in resources, don't have all the time in the world. And for ESRS, traceability is a huge, huge and very vital part of it. It's key for auditors, really. Auditors are going to want to see all your documentation, the written down of the systems involved in how you identified your Aarohs. They're going to want to see how you assess the data, how you engaged with the stakeholders. And this is really, really crucial. But if you're just doing it on a large Excel spreadsheet, the risks of that getting lost, of the data, messing up or whatnot is high, is really high. So I think by not using technology, by sustainability departments, CSOs, ESG managers, or whoever's responsible in your organization for doing the ESRS reporting, by not using technology, you are going to be managing, huge spreadsheets, large, significant amounts of data, and that's going to be taking up your time. And as you're too focused on that, you can't focus on what is actually the most important part of ESRS, and that is using the data you gather to actually make an impact in your organization and across your value chain, to take that data and to make sustainable changes. So I think, Aaroh, here, I'll ask you a question, if that's okay. I'm really keen to hear more about how Credibl can support with these sustainability managers, ESRS, ESG managers, finding it too much of all this data that they have, and how does Credibl help streamline this?
Sure, sure. I'll address that, Kayleigh, and thanks for that perspective, right? This is a problem that us being a technology provider hear a lot of times, that this sort of Excel hell that is created for CSOs is quite problematic. And then brilliant point there, right? That the prime responsibility of these teams is to be strategic and really drive operational efficiencies to be better and to make their enterprise more sustainable. But a large part of their time just goes in managing the data chaos and reducing all the risk that comes with miscalculation, misreporting, miscollection, or not understanding or comprehending the framework in the right way, right? So brilliant point there. And to address your question, that's around how we help customers. I do have a couple of slides, so I'll maybe take 2 minutes to walk through those. Let me pull some of these slides, but largely it's around those pillars, right, Kayleigh, where you mentioned there's a huge risk, but also an operational overhead, right? And in the broad landscape, we've seen it's going from very voluntary and greenwashing where it started, right? There was a lot of loopholes to be tied. Now it's moving to a mandatory and data-driven exercise. So we are seeing this across the globe with BRSR in India, ASRS in Australia, the ESRS in the EU. So it's one part of the problem is just collecting data from all of these different stakeholders, business units, right? So we call it non-financial bookkeeping is a haphazard and broken process. And it's a hard problem to solve because it's not just your own operations, but it's also your value chain, how you bring them into the scope and how much visibility over the value chain do you have, right? And the second, it's still an evolving landscape. The talent pool is limited. So we have uh, literally very few individuals like yourselves, right, who are deep experts and who can drive decision making. So what we enable customers with, or when Credibl is deployed for a organization that's tracking their ESG data, this is what a typical process before Credibl looks like. So they're collecting all of this data in emails, spreadsheets, creating a lot of data chaos, right? And inherently that captures a lot of risks in these organizations. Even if a lot of organizations start to say we have this data in ERP systems, it's realistically a very small subset of this data and very less optimized for your reporting, right? So that's one key problem that we address. That's just around the data collection. So how you collect data from different business units, offices, and then bring your value chain into scope. All of that goes into Credibl and is readily available for your reporting, right? Like even the reporting layer is integrated into the framework, into the platform itself. And I think it's also a crowded space where we are, right? There are a lot of technology companies, helping organizations do this, but where we really differentiate is the meaningful use of the latest AI, right, which is called generative AI. So these are the four pillars of our platform: measure, manage, report, and the supply chain or your value chain. And everywhere we meaningfully use Gen AI. And not spending more time here on what we do, but how it helps, right? ESRS today is a reporting burden to some, an opportunity to some. But the regulator will, soon demand and will, of course, need assurance on top of this data, right? So how do you make sure you are not just comprehensively collecting this data, but the data is assurance ready, it's audit ready. So we've built a lot of AI tooling to help you capture that risk, right? Risk of misreporting, miscalculation. There is what we call a virtual internal auditor in place that allows CSOs to even look at how accurate is the data that they're collecting. And from moving from guesstimates or estimates to to real data, to evidence-backed data. So with that, I'll stop and probably shift to the questions, but largely it's like to summarize what we just saw, it's around comprehensively collecting this data across your value chain, doing it for a multi-framework setup. Most companies will report in many frameworks. And then the AI really supercharges your performance in aggregating, collecting this data, driving insights, and giving you a layer of assurance on top, right? So that's the key message I wanted to talk about. So yeah, now I think we already have a good pipeline of questions and more are flowing. So let's see how many we can take. And I think we also have some attendees who've raised their hands. So Natalie has been waiting for a while. Natalie, do you want to speak your question, speak out your question? Prashant, can we make sure Natalie is able to unmute herself and has the right permissions? Yes, so Natalie, permission is there for you if you want to unmute and talk about your query. Okay, Noor, do you want to go ahead? Noor has also raised hands. There's Rabin. Rabin, you want to? Yeah. Rabin, please go ahead. Okay, there seems to be Rabin is still muted. Never mind. So,
Hi everyone.
hey,
Can you
hey,
listen me? Okay.
yes, yes.
Sorry, I joined very late, but I was just parallelly checking your tool from the website. My
Okay.
question is, without any understanding in previous discussions, do your tool support all ESG data collections? I mean, in the market, the company only taking into the E-related topic and the scope 1 and 2 only, but missing absolutely social related data there, where we can have a roughly 50% quantitative data under the S topic. And do your platform support this ESG and along with scope 3 calculation?
That's great question, Rabin. And those are the two key areas where it's still an underserved market. So I really appreciate that question. So absolutely, the short answer is we do both, right? And we have the most comprehensive coverage of ESG KPIs. It goes into thousands. And of course, when we onboard an organization, it's configured to what their materiality, uh, materiality definition is, whether the focus is on ESRS, then they'll have done a double materiality assessment. Based on that, we will configure what are the quantitative indicators within social, within governance. So there's absolute coverage for that. The data auto aggregates, goes into your report and gets validated using AI. And then scope 3, again, that's a hard problem to solve, but we have a really multimodal approach to solving for scope 3. We have inbuilt calculators for all the scopes, including the tricky categories like financed emissions, right? So we're adept at that as well. And we have a very large data set that allows us to estimate a lot of your scope 3. But whether it's a spend-based method or an activity-based method or a supplier-specific method that an organization wants to follow, we have capability across all, right? So all the 15 categories, but very, very deep in each of these categories and highly automatable through existing integrations with your SAP or ERPs for purchase data, for example. And for financed emissions, for a lot of finance companies where, again, doing this in a highly automated way. So short answer, again, summarizing this, we have the most comprehensive coverage for SNG and very deep capabilities specifically on the scope 3 side, right? So would love to show you the platform sometime, and that goes to all the attendees here, right? So uh, uh, feel free to reach out to us. And of course, we're offering a 1 hour free consultation as well as a platform demonstration to all of the attendees here. We'll be shooting that out as an email separately. But would love to learn from the challenges all of you are facing here, right? And how can we help bridge that gap? Some of it we would have cracked already, and some would come from this forum here, right? So Thanks, Robin, for that
Okay,
question.
my questions just further. Exactly, I will bring you challenge on your table. For example, I have a billions of materials that I have to buy for my company each year. And the problem lies to the primary data. Everyone is struggling with scope 3.1 actually to calculate. And
Right.
do your platform support hybrid model as primary data is not available? If I give you the 10% as a primary data out of 100 and 90% data, can you calculate by spend base? And not only calculating, do your calculation is valid by KPMG, for example, Deloitte or third party validations? How significantly I mean, is your methodology is valid? How you can assure to me if I use your platform?
Sure, sure. Again, great question. And I'll address that in few words, right? So one is all the methodologies and emission factors we use are verified and assured, of course. Right, that's the risk to our business. So we definitely don't want that. And second, you asked around a hybrid method, right? So that's what I was trying to express. We have a hybrid method of solving for scope 3. We know nobody has data available at actuals for billions of line items. And we do work with the large corporations, large organizations of the world who actually track and manage that data on Credibl, right? So when it comes to scope 3 category 1, there is spend based, of course, there's activity based, and there is supplier specific method, but you don't need to, it's not a either or kind of a situation. It's more like an and, right? So for 10%, you're going supplier specific. For your top suppliers, you have PCF data, you're using that. For the rest, you're going activity based, and for some other categories of procurement, you're going for a spend base. So that's absolutely available. And you mentioned the term billions. So I would say procurement can go into uh, millions and thousands. But uh, in that also, we have really invested in AI to solve for large sets of data that is changing every year, right? So another problem with the procurement is it's not consistent month over month or quarter over quarter. So we've taken that also into account. So absolutely covered, Rabin. And I hope that answers your question. I'll do justice to others who have asked more questions.
Yeah, thank you so much. Yeah, seems very complex. Everyone know about the topic and context, the data and primary and the methodology behind, because it will go by third-party validation, and they have to be very conservative in the process of validation. Therefore, I just asked to, because in the market, everyone has, hey, I have a tool, this, that, AI model or something, but not really one tools is very comprehensive. That's my, thank you so much for the, anyway, thank you for your feedback.
Thanks, Robin. Kayleigh, I think we have a couple more minutes to answer some of the questions. Shashank also has one question, but I want to do justice to the order that these questions came in. Sorry, Shashank, to keep you waiting. So it talks about Wim has asked, in the Budapest Declaration, EU has indicated that they want to reduce the administrative burden, and they want to consolidate some of these frameworks, right, into a singular. So my take on that is the expected impact on the reporting task largely remain the same. Consolidation is a great thing to do because it makes your focus better, right? Now you can shift focus. The reporting fatigue might reduce. The number of sheer KPIs that you want to track will still ballpark remain the same, right? So it's saying I'll bring you under a larger umbrella, but you'll still have to do justice to each of these smaller KPIs. Kayleigh, anything you want to add there?
Yeah, I think I would agree with you there, Aaroh. The EU, they are aware of the reporting burden and they are trying to streamline it as much as possible. But if your business has material impacts and risks, you'll still need to report on them. I think what's really key, and hopefully the EU will consolidate this, is I think what's more important is really the streamlining of the methodologies. streamlining of how you identify your impacts, risks, and opportunities, how you identify what is material. And they're starting to do that also with the other standards and frameworks out there. But that is really where a lot of the time takes, because if you have to identify your Aarohs using one methodology and then do it all differently with another, then your KPIs are different between different standards, different legislations. So fingers crossed, that is what we're all hoping for. And I know that a lot of kind of governments, a lot of corporations are calling for that.
Great. Awesome. There's also another question that says, where if you're looking for direction, how to ask the right thing of our suppliers, where should we be looking? Is that the CS3D? So yeah, it's that. But Kayleigh, you could elaborate more, right?
Yes. So for your suppliers, well, actually, it depends what you're asking for. I would say, in general, the CS3D is very important for getting that due diligence all across your value chain. But if you're concerned that deforestation is a material issue, follow the EUDR, follow E4, biodiversity and ecosystems. But in general, yes, the methodology for doing the due diligence across your business and across the value chain, regardless of whether it's an environmental, social issue, the CS3D is what you should follow.
Okay. I think we're at time, but I'm willing to stretch and take a couple more questions that have already appeared on chat. But for the rest of us who have a tight schedule and want to drop, please feel free to drop. This recording will be shared with you. And we're also offering this 1 hour consultation. So we'll follow up with an email that details out how you can avail that and then move to deeper discussions on how we can help solve some of your challenges today. So thank you, everyone. I'll be here for maybe Kayleigh and I will be here for 5 more minutes if there are more questions. Yeah, thank you. Thank you. Have a good rest of the day.
Thank you all.
Yeah. So, Kayleigh, okay. So I see one question that directs to Credibl. So, does Credibl support interim reporting? Yes, we do, and it's a monthly data collection frequency that we advise. So not just interim quarterly targets or a half yearly reporting, but you can track progress throughout the year. You can do continuous monitoring. The AI and the data red flagging, the internal assurance engine runs throughout the year. As soon as a data point lands onto the Credibl platform, it starts getting assessed for key criteria that's been configured, right? So we definitely support interim reporting. And the idea is if you measure more frequently, you manage things better, right? How we go on a weight loss journey, we start measuring our, the size of our waist and our weight. That's a similar analogy here, that the more the measurement leads you to better management, and you're always aware where there's a risk of going wrong or where you're really going right. You can pat yourself on the back, right? So again, okay, some of these questions we've addressed. Diane says a recording will be shared, of course. Kayleigh, do you want to pick a question that I might have missed?
Sure. I think there was an interesting question in the chat on TCFD, because we didn't cover TCFD as a standard. So TCFD is the Task Force on Climate-Related Financial Disclosures. And the question was, how does TCFD and ESRS align? So both ESRS and TCFD are organized around the same 4 disclosure pillars: governance, strategy, risk management, and the metrics and targets. And all of TCFD's disclosures are fully integrated with ESRS E1. So this means if you have already been reporting under TCFD, you can use that data to report against ESRS E1. And the way you gather that data and how you need to report on the more governance aspects are exactly the same.
Interesting. There's another question that says, is there a specific format in which the reporting must be? Is there a reporting template structure, or it's fairly open? So my take would be the framework gives a guidance on how this information can be presented, but it's not hard and fast as long as you're covering the entirety of the report and doing justice to your materiality assessment. Anything, Kayleigh, that you want to add?
Yes, currently that is correct. The general disclosures at the beginning will lay out how and what you need to include, but they are expanding what they call the XBRL. So the
Yeah.
XBRL is almost like a stand. It's not really a standard, but it
Right. I can
enables
help
other.
out probably.
Yeah,
XBR
yeah,
is
you go.
like a digitized version and a machine readable version of your report. It's an extension of the XML format, how we know. And I think the electronic reporting format will mandate a certain structure where this report has to be presented in. That's the ESEF, and there's a lot of consolidation happening there on the digital side. And what it allows is once the regulator is getting all of these disclosures, uh, uh, they can process this information better, right? And they can even surface risks better while assessing all of these regulated entities that are large companies and can create systemic risks, right? If something goes wrong. So for the government to process, they can't go through all these disclosures, even for financial regulators, investors to process. XML, XBRL makes it a lot easier to process and compare all of this information, right? So,
Yeah. And not just for regulators, but for consumers, if consumers
correct.
interested in
Correct.
reading the sustainability reports, or investors or civil organizations, that will all be readily available through this format to increase the transparency and comparability.
Awesome. So I think, yeah, the other questions we'll post a comment in the chat. We'll keep this chat open. And for now, we'll close the webinar. Close to 50 people are still with us, and that means we've been able to engage this audience very well. So thank you, everyone. Thanks for the learning that you helped us gain with these insightful questions. And I hope we were able to show some value today. But I'll really look forward to more discussions where we can deep dive into your, specific cases and need for CSRD and how we can help you prepare for it better. So thanks, Kayleigh, for your time today. And really, it was eye-opening, some of these things for me. And overall, this discussion, I'm taking a lot from here.
Thank you, everyone. Thank you for joining.
Thank you.